Appreciate it. Well, market down almost 200 points. Nilesh Shah is now joining us. He's Managing Director, Kotak Mahindra Asset Management Company. We also have Prakash Diwan, who is joining in for a quick chat on the state of affairs. Gentlemen, good afternoon. Great to have you with us here. Nilesh bhai, let me start by addressing the market for a quick bit, if I may. You've got a pretty aggressive, right, repricing of the rates market in the US after that CPI print. But historically, last 5-6 months, and this is the third straight beat in inflation numbers there, but historically this move beyond day one has not lasted. Things go back in a more benign kind of a fashion, and the market's done well. Just wanted your thoughts. Will we see a repeat of that, or do you think we are at a slightly more important juncture?
I think in the US rates market, there is ultimate optimism that at some point of time, Fed will have to cut rates. This optimism is driven by the fact that US debt to GDP ratio is now in excess of 120%. They are accumulating $1 trillion of debt in at about 100 days. There is uneven recovery in US where people with leverage to student loans, credit card loans, and mortgage loans are getting the burden of higher interest rate. So in some sense,
I think we're losing that line with you, but I'll just sort of come back to you as soon as I'm told that the line's good to go, but the frame was freezing. So we'll just try and fix that and go back to him as soon as we have that up and running. For now, by the way, not very much going on with no great change. I mean, still down about 200 points. Prakash is also with us. Prakash, just a quick word on the market itself.
Good afternoon, Prashant. So I think the market's doing its own thing. It's kind of rewarding patience and conviction. Actually, people who have bought dips, they've been rewarded. People who try and book profits at regular intervals, they've also made money. So it's a nice situation. It's not kind of capitulating as it was seeming to give some sort of an indication when small caps and mid caps had some sort of a cool off early March. But my sense is the kind of money that's looking at coming into our markets, whether it's through the ETF route or whether it's even the larger actively managed FIs, a large part of that will probably come in post the election outcome, right? So whatever outcome you've kind of factored in, but there will be a milestone-driven liquidity gush which could happen. And my sense is the market's building up in anticipation of that. So good. And then, of course, we are staring at earnings season today onwards, largely with TCS flagging it off. So it will start kind of, getting directed more by that and some news flow on certain pockets where there's a lot of smart fundraising that's happening. We've seen the Bharti Hexacom IPO get so well rewarded. And so I think the market's going to look for those cues apart from the earnings season numbers and then it'll take its right. But the undertone is definitely positive. That much I can tell you, Prashant. There's no disappointment in any pockets where people are finding it difficult to kind of allocate more money.
Hi, Prakash. Good afternoon. Prakash, I want to ask you about Exide. That's the one that's moving in style in the last few minutes. If I look at it from pre-COVID levels, in February 2020, say it was around 200 rupees. Till exactly a year ago, it was still 200 rupees only. So around 3 years, it didn't do anything. And now in a matter of 12 months, the stock has more than doubled. And, this week itself, it's moved from an early 300 to around 400 rupees. Your view on the stock at current reckoning?
Good afternoon, Nigel. So, if you actually nailed it, you calculated from a 3-year perspective, this 100% return probably averages out at a CAGR of 35% or whatever, which isn't something which is eye-popping in that sense. Of course, you could attribute the slow move in the first few years, given the slowdown in the auto sector as a whole. But what's now kind of working towards in their favor is the kind of tie-ups that they've started announcing. It's the shift to a new technology platform that's going to help them because batteries is something which you can't ignore, whether EV vehicles sell more or less or, the larger ones or the smaller ones. But if the likes of Tesla and all are looking at India from a manufacturing-based perspective, not necessarily just a market perspective, you will have a lot of battery tech coming into the industry. And Exide has the kind of right to win, given its strong distribution, strong franchise with OEMs, and also they'll be able to carve out a lot of R&D allocations, which will start kind of building up the trajectory for the next 3, 4, 5 years. But batteries, you really don't have any contenders except for a couple of them. Exide stands right at the top, so that's where the positioning is helping them, and of course the numbers have also improved on the ground. So, but then P expansion and EPS growth doesn't go always in sync. There's one that leads to the other, and then that's exactly where we are seeing the P expansion catch up on Exide. But I think it still has some legs as their plans start kind of reaching commercial stages. You'll probably start seeing a build-up of expectation on earnings improvement as well.
Okay, all right. I think Nilesh Bhai is with us. Nilesh, just to complete the point, I mean, we lost you there. The line broke.
Yeah, sorry about that. US rates market is constantly discounting that ultimately Fed will cut rates. This is driven by their accumulation of debt of about $1 trillion in 100 days. Debt to GDP ratio for government debt at 120% plus, and uneven recovery in US, which is creating pressure on people who are leveraged on student loans, credit card loans, and mortgage loans. So while data right now is not supporting rate cut, market is assuming that both US government and US Fed will be looking to cut rates as and when data becomes favorable, which is why it is always 3-month rolling forward rate cut expectation.
And in a way, some have said that it's the best of both worlds, right? I mean, it's the growth is presumably strong, but there is a lollipop of rate cuts down the line. So sometimes waiting for something is more pleasurable than actually getting it. So it's like
Absolutely. It's a Goldilocks scenario.
Absolutely. The other big thing, Nilesh Bhai, I wanted to talk to you about was the Vodafone. It's a big event, right? The FPO, which is going to come through. And the telecom sector, the incumbents have done very well, be it Bharti. I mean, lots of interest in that particular space. And now you've got Vodafone Idea, which is essentially going to launch this FPO. They've committed infusion from the promoter entity Aditya Birla Group earlier this month. It's like a revival of sorts. If they do get this fund infusion, maybe bank lines open up. The government, of course, owns over 30% in the company. Just wanted your thoughts broadly on the sector, because a lot of interest. There's always been a lot of interest in this stock. And now maybe, if the FPO, etc., goes through and, the cap table looks strong with strong names, you've got a chance of a healthy third player in the sector as well. Your thoughts, Nilesh Bhai?
So, Prashant, as Kotak Mutual Fund, we remain overweight telecom sector, driven first by the fact that digitization of economy is a long-term trend, and a strong network through telecom sector is backbone for it. Second, the market is also discounting tariff revision. We have highest data usage of 19 GB per user per month, and the lowest ARPU of $2 per user per month. At some point of time, tariff revision should happen. That is what market is expecting. The second thing is also shift of 2G users towards 3G, 4G, 5G users. This premiumization, which played out in consumer staples and consumer durables, is also playing out in telecom sector. As people move towards higher paying network, automatically profitability of telecom sector improves. The third thing, which is probably going to happen in telecom sector over a period of time, is that 5G services, which are being today offered almost at same rate as 4G, will get people used to it, and they will then start paying higher price for it. So there is a strong case for telecom sector revenue to go up disproportionate to their cost over a period of time. And in telecom sector, access to capital is critical for success. This is a business model where you invest upfront in technology, in network, and monetize it over a long period of time. So people having access to capital should do well in telecom sector over a period of time. And it is riding today on tariff revision as well as digitization, which are longer term trends.
Nilesh, hi, good afternoon. I guess the market is definitely, excited about the telecom sector, that's for sure. And I think today's listing, if anything, proves that and shines a light on that. I'm talking about Bharti Hexacom. By the way, the stock is still up 42-43%. It's a smaller company from the Bharti stable where the government is also a major shareholder. And they operate only in two circles. So it's a smaller operation. But nonetheless, the market's liked whatever Bharti Hexacom has put on the table. But Nilesh, to come back to that point of tariff hikes, and for the market, I think that has been the big pivot that everyone's waiting for, but there's been no meaningful move. I mean, companies have tinkered with tariffs at the margin, maybe some premium end offering, but not that bulk space, the bulk prepaid 4G space. Now, if we do have a healthy third operator as well in the country again, then doesn't that diminish the chance of having a big tariff hike?
So one, that could be the case. Never say never in the market. But for last 2 years, there has been no revision of tariff upwards. The usage of data has gone up substantially compared to global averages. It will be fair to assume that at some point of time, telecom operators will focus on cash flow generation and profitability and price their product appropriately. We have seen consolidation in a sector like cement has resulted into price discipline. We didn't see that in telecom sector for a while, but who knows, things could be turning around now. And at least as of today, markets are discounting that after 2-year lull, there is a reasonably high opportunity, notwithstanding revival of third player, that there will be tariff revision on account of higher data usage, on account of 2G consumers, users moving to 3G and 4G, and on account of 5G users willing to pay higher because they are getting used to 5G speed.
Well, Nilesh, good afternoon. Just hold that thought. I just want to get a view from Prakash on idea itself. Prakash, with your disclosure, could you tell us what is your view since this FPO has been announced now?
Yeah, so as a matter of disclosure, I do have a position at this name. But of course, my view corroborates a lot with Nilesh Bhai's listing on the fact that it's a sector that's seen significant amount of consolidation and has matured in a very nice way. Of course, at the price of most of the operators not making money, but consumers have enjoyed the fruits of this expansion for the last many years. And we probably pay one of the lowest rates in the world. But for Vodafone Idea, Nigel, is very simple. It's available at a market cap of 62,000 odd crores, right? If you understand the replacement cost, when Jio launched itself and put its entire might to go all India with the rollout, they probably spent upwards of 3 lakh crores. And even if Idea is today, let's say 1/5 or 1/6 of what Jio does in terms of presence or subscriber base, 62,000 crores is not something where you are overpaying. So I think the FPO is priced very smartly. It does leave the opportunity for growth going forward. And a lot of people today probably seem to be believing that the 10 rupee arbitrage with the current market price is significant enough for you to sell if you are holding Vodafone and buy in the FPO. But I think the response in the FPO, particularly from the QIB segment, will probably decide how soon the stock would revive, while the company itself seems to be on a path to revival. And as all understand, telecom is something where we've seen a phase which is about 3-4 years of acquisition by the incumbents, which was Jio and to some extent Bharti in its expansion mode. Then there's consolidation, and now there's profitability. So even if the ARPUs were to be hiked a bit from where they are at 200 odd, it means a significant change in the revenue profile because they no more need to spend too much on client acquisition, right? The subscriber acquisition part is probably being spent on. There's a significant amount of effort and time that's gone into it. Now it's time to kind of start adding more value from what you're offering. And 5G rollouts have just got done. I mean, it's just been a year that we saw last 22. It started. The universal service obligation made it compulsory for them to just be present in a lot of locations. The actual usage and monetization of that infrastructure, and that's reflected in the Indus Tower numbers as well, right? So it's all getting together, falling in place of sorts for most of them and for Vodafone Idea as well. Given the fact that they've survived the tumultuous first 3-4 years where they were cash strapped. And remember, those 2 years we were very disappointed with Vodafone because there was no money coming in. Now there's money coming in from all quarters. The promoters are willing to put in money. They've been dodgy about it, but they've started. They've committed to investing into the business. There's an FPO around the corner. So I think it's definitely something where, in terms of timing, it could probably be a very different phase for most telecom players as well as for Vodafone, particularly given its cap table getting to be restructured so rapidly.
Okay, all right, gentlemen, got that. Thank you very much. Nilesh, before we will let you go, we've discussed telecom at length. Just, your overall thought on the market. And since this is, top of mind, this is a burning issue in the last 24 hours, this whole issue of FPI taxation is back, courtesy the amendment to the Mauritius Treaty, right? Our colleagues in Delhi are also trying to get more clarity on this, whether this is going to impact investments made before April 2017. Just your thoughts on what you might have heard, the chatter you might have heard in the last, 36 hours and the cool-off that we're seeing in the market today.
So we will be actually going by what clarification comes. And I was just listening to Dinesh Bhai on this issue, and he had some views on how FPI taxation will matter. Our submission will be that today India is getting a very, very high valuation premium because of clarity of policy and governance. And we should clarify things in a manner so that it does not create any confusion in the mind of global investors. I don't think so. We have to now convince global investors on the growth side. They are all fairly convinced. But the stability of policy and governance standards are something which differentiated India vis-a-vis rest of the peer group. And we must maintain that differentiation.
All right. We will wait for that clarification. It's an important one. And, we'll sort of get your views once we have that. Thank you very much, both of you, for joining us. Nilesh Bhai, appreciate you joining in. And thank you very much for being with us here. Prakash, it's always a pleasure speaking with you. Have a good weekend, gentlemen, and speak to you soon again. Thanks indeed. Well, I think we've got the market, which is down about 22,535 is where we're at. We're back. More market conversations on the other side. Stay with us.
Thank you for watching CNBC TV 18 and do follow us on all our social media platforms for news, updates and more.